Welcome to the podcast on Nations Trust Bank PLC's business strategy analysis with the 2025 annual report as the main source of information. Nations Trust Bank is a registered commercial bank that trades on the Colombo Stock Exchange and operates in one of South Asia's most vibrant and competitive banking sectors. I picked Nations Trust Bank because, according to its own figures, 2025 was one of its most significant years in the banking history, with a record profits, an expanding digital strategy, and a big purchase that will transform its retail footprint. Throughout the next 15 minutes, we'll look at NTB's strategic path, the external and internal forces influencing its decision, its competitive positioning, how it's implementing that strategy operationally, its financial health, and lastly, a critical evaluation with recommendations for where it should go next. Let's begin with context. Nations Trust Bank was established in 1999 and has been listed on the Colombo Stock Exchange since then, indicating a governance and transparency standard that the bank has had to meet for more than 2 decades. It is categorized in four business domains: consumer banking, which focuses on retail banking, personal loans, and consumer finance. Commercial banking focuses on SMEs and growing businesses. Corporate banking, which focuses on large scale corporate financing and transactional banking. And lastly, treasury, which is foreign exchange investments and liquidity management. As of 2025, the bank employed 2,462 individuals and had total assets of 700 billion Sri Lankan rupees, representing a 28% increase year on year. And in September 2025, NTB signed an agreement to acquire HSBC's retail banking unit in Sri Lanka, a move we'll revisit since it's critical to know where this banking is headed strategically. Moving on, NTB's declared goal is to increase access to economic opportunities and establish competitive financial ecosystems that generate long-term growth for all stakeholders. This is reinforced by four principles: respect, integrity, collaboration, and excellence that are more than simply wall-art. We'll see how they manifest themselves later in the bank's people and culture programs. More strategically significant are NTB's four fundamental pillars: business growth, consumer experience, cost and efficiency, and digitization. These four pillars are not distinct pursuits, rather, they're mutually reinforcing. Digitization increases both cost efficiency and customer experience at the same time, and corporate growth is purposefully pursued along disciplined focus lines rather than broad expansion. The tactical message here is very clear. This is not a banking pursuit expansion for its own purpose. Profitability is clearly positioned as a result of stakeholder value generation rather than its own goals. To comprehend, NTB's choices, we must first understand the context in which it operates. Using a pastel perspective, Sri Lanka has had considerable political stability when implementing IMF backed reforms. Economically, we are seeing a recovery, lower inflation, and more critically for a bank, growing loan demand as firms and consumers restore confidence. Socially, digital acceptance is accelerating very quickly. AI, digital banking platforms, and cybersecurity are now board level objectives rather than just IT problems. Environmental sustainability and green financing are increasingly impacting loan decisions as well. Legally, the Central Bank of Sri Lanka keeps tightening regulatory and corporate governance obligations as well. Now applying the Porter's five forces model to the competitive slides. The threat of new entrants is modest. Banking license and capital requirements are a significant obstacle. Supply power is low, however, buying power is strong. And replacements such as fintechs, mobile wallets, and informal loan pose a significant challenge there. And competition among existing banks is also fierce, with NTB competing head-on with Commercial Bank, HNB, Sampath Bank, Bank of Ceylon, NDB, and Ceylon. Essentially, the macro environment situation is improving while the competitive environment is becoming more intense. This combination is precisely what makes strategic positioning so vital right now. So, how does NTB compete inside that environment? We examine internal resources using VRIO framework, valuable, rare, immutable, and organized. NTB's brand is valuable and rare, but not completely unique. Competitors can and do spend in brand development. Digital banking capabilities follows the same pattern. It is valuable and scarce today, but the technology itself is replicable over time. Thus, the true distinction will be execution time. Credit card leadership, on the other hand, scores high on all four categories: precious, rare, unique, and well organized, making NTB's strongest and most defended resource. Halted by alliances such as its American Express collaboration, which we'll explore shortly. Risk management is valuable and well organized, but it's not uncommon or difficult to replicate. Most sources, like banks, have similar frameworks, and it's personal and valued, but only partially rare or unique as talent move across industries. Zooming out to the six capital concepts: financial, human, intellectual, manufactured, social, and natural capital. NTB's own reporting demonstrate an authentic effort to manage value generation holistically rather than just financially. The most obvious takeaway: credit cards are NTB's genuine source of sustainable competitive advantage, whereas digital and brand advantages require ongoing reinvestment to remain competitive. So this leads us to competitive strategy, which employs Porter's generic strategies paradigm. NTB strategically places in the broad differentiation quadrant. The proof is everywhere, particularly in how it positions itself. Premium banking services targeting affluent, high-value customers with personalized wealth management. A strategic co-branded alliance with American Express that leverage global brand prestige and integrates into premium cardholder network. A next generation mobile first digital banking platform designed around AI driven insights and smooth onboarding, and a customer experience model built on a specialized relationship managers. NTB is intentionally not competing on price or cost leadership. This sector is covered by larger, more commoditized businesses. However, its competitive advantage stems from a combination of shorter innovation cycles, stronger digital competencies, and a premium service posture that larger, slower moving competitors struggle to reproduce quickly. That's a sound strategy. But it also leaves NTB vulnerable if a competitor succeeds to out innovate in a digital while it's undercutting its prices. So then let's talk about the ways that NTB is truly expanding. According to the ANSERF metrics, NTB's growth is mostly driven by its market penetration and product innovation inside its present markets, rather than expansion into new geographies. Organically, this entails expanding digital banking, boosting green finance projects, and increasing the lending portfolio, all within Sri Lanka. The HSBC retail banking portfolio that was signed in September 2025 stand out as the year's most significant strategic event. The transaction integrated over 200,000 HSBC retail customers, a trusted branch network, and a premium banking portfolio into NTB's existing operations. Strategically, this is most effectively described as expedite market penetration through acquisition instead of organic growth. It is speedier, lower risk option to attain size rather than starting from scratch. And the timing isn't also coincidental. It comes just as Sri Lanka's economy recovers, interest rates fall, and loan demand surges, implying that NTB is positioning itself to capitalize on growth as the cycle swings on its own favor. A strategy is only as good as implementation. Therefore, let's take a look at how NTB organizes itself to achieve this. It follows a very conventional yet rigorous format with a CEO, business unit leadership, and 4 board committees managing risk, IT, audit, and HR, providing clear governance checkpoints for strategic choices. On the personal side, the stats are quite impressive for a bank of size 443 new hires this year, 48,501 total training hours distributed across 606 individual training sessions. That represent a significant investment in capability development rather than simply increasing staff. And this is where the 4 values we stated earlier, respect, integrity, collaboration, and excellence, come back into play. They are portrayed as an abstract branding, but as the cultural underpinning for a digitally driven, customer first strategy. The question to be answered is whether that level of training expenditure is sufficient to enable the organization to accommodate 200,000 HSBC customers and employees without inconvenience. That is a true execution check that is coming in 2026. So this is when the method is put to the test against actual results. So let's take a look at the numbers. Operating income increased 18% to 52.2 billion Sri Lankan rupees. Profit after tax increased 15% to 19.3 billion Sri Lankan rupees. On the balance sheet, customer deposits increased 31% to 502.2 billion Sri Lankan rupees. Loans and receivables increased to 50% to 430.4 billion Sri Lankan rupees, and total assets increased 28% to 700.3 billion Sri Lankan rupees. For shareholders, earnings per share increased by 15% to 57.76 Sri Lankan rupees, while the voting share price increased by almost 68% throughout the year. The outcome is equally solid in terms of efficiency and asset quality. The cost to income ratio improved to 32.49% from 33.72%, and the stage 3 or non-performing loan ratio improved to 0.91% from 1.6%, implying that loan book expansion occurred without a commensurate increase in bad debt. However, it's not perfect scorecard, and any competent strategic analysis must acknowledge this as well. Return on equity fell to 21.86% from 24.22%. Return on assets fell to 3.02% from 3.27%. The net interest margin fell from 6.94% to 6.05%. This is typically a pattern in a declining rate environment. Where interest rates fall, lending margins inevitably decrease even as volume increases. So the honest takeaway here is that NTB is growing quicker and cleaner than before, but at a bit lower margin, making cost discipline and fee-based income even more critical moving forward. So putting everything all together as a SWOT analysis, Strengths include a clear market leadership position, excellent brand recognition, and a very advanced digital banking capabilities. Weaknesses include a high concentration in a single market, vulnerability to interest rate cycle as evident by the margin statistics, and a customer base that leans toward a premium niche rather than a mainstream market. Opportunities include AI-powered banking, regional development potential, increased ESG integration, and successfully integrating the HSBC purchase. Threats include increased competition from large rivals, a growing cybersecurity risk with each digital product launch, tighter regulations, and persistent economic uncertainty in Sri Lanka. Based on this, 5 recommendations stand out as well. To pursue or preserve this digital advantage, start by investing more in AI and open banking. Second, establish a robust SME banking ecosystem and underutilized growth opportunity. Third, explore measured regional expansion to mitigate single market concentration at risk. Fourth, increase ESG linked lending as both a growth product and a buffer against future regulatory tightening. Fifth, and most importantly, cross sell effectively into the incoming HSBC client base, as the value of the acquisition is totally depend on how they execute, not simply the transaction itself. So, to summarize, NTB's strategy is perfectly matched with its own purpose. Its execution is great on paper. Its financial success in 2025 was excellent by practically every headline metric, and its competitive differentiator through premium digitally led banking is logical and defensible as well. The route forward, anchored by the HSBC integration, appears to be genuinely promising as long as margin pressure and execution risk are carefully handled. According to the report, a properly articulated strategy backed up by digital innovation, disciplined execution, effective leadership, and good financial management may provide long-term competitive advantage even in an increasingly competitive banking business. Thank you for listening.